Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we get started, standard disclaimer, none of this is investing advice. Do your own due diligence. And today on the show, we have a notable investor in the uranium space, Mr. Terry Papineau. Welcome to the program.
Hi, Jesse. Thanks for the invitation and greetings from French River, Ontario.
Awesome. So I want to talk about how you first got started in investing and what led you to the uranium space.
When I was younger, I was always interested in finding out, how money works and, what are stocks and what are bonds and how to get into that. And when I was a bit younger, internet didn't exist at that time. So unless you had someone close in your family or you took a course on that, it was not very accessible to me at the time. I was introduced to investing through mutual funds in 1996, and I actually worked in that field for 5, 6 years, which I really enjoyed. And my primary method of investing at that time was through mutual funds, but I got to watch and follow the markets and the different mutual funds and the different types of mutual funds and different jurisdictions and all that. So I that's how I kind of got my first taste of an experience into investing. And in 2015, 16, I had a little bit more time where I was able to research this different sectors and start to look at investing into stocks directly. And with the development of the internet through that time, different opportunities were available through different platforms on internet to be able to open accounts and start investing on your own. And that's how I started. And this actually coincided with my foray into the uranium sector. As I mentioned, I've been following the markets very closely since about 1995. On a daily basis, just trying to see if there's patterns that exist. And I actually was able to identify different patterns, and some of these patterns repeat themselves. And what through my studies and readings and just my style was value. So trying to find something that was overlooked, was beaten down, but there was something there. It just wasn't recognized at the moment. And one day I was listening to Bloomberg News, and this analyst for a company was talking about Cameco. And I hadn't really been aware of the uranium sector. I remembered the bull market in 2006, 2007, but the different companies I wasn't really aware at that time. And so he was talking about Cameco. This was in 2016, talking about how it was a great company. I had some of the best uranium assets in the world, some of the richest mines, great management, great, jurisdiction, great everything. But for some reason, the stock was just beaten down and beaten down and beaten down. So that really it piqued my curiosity, got my attention, and I started looking into Cameco at that time. And that was my first investment into the uranium sector. At the time as well, there was very little information available. Like there was a few YouTube videos. You had to, like, Cameco had a lot of great content on their site, but content that's on the site of a company, of course, they're going to talk their own book, but the information they provided really painted a good picture of the supply demand scenario in the uranium sector. And that's what got me going. And my first investment into uranium was into Cameco. The supply deficit situation at the time, they painted a really good picture. And as time evolved, more and more information became available on YouTube. There's Mike Alkin was putting out content. There's videos from Nick Hodge at the time. Gwen Preston, the resource maven, had done a couple of videos. Rick Rule was active. So that was my primary source of information at the time. And then I got active into Twitter. And Quakes 99 was a very valuable, and still is a very valuable source of information. And that's how my knowledge of the sector grew. And so that's how I got interested into investing and specifically into uranium.
Yes, and shout out to John Quakes, the godfather of uranium on Twitter.
Right.
So, you've mentioned in the past that you're all in on uranium. It makes up all of your portfolio at the moment. Is that still the case? And if so, what gives you the conviction to go all in on a sector like that?
You know, I just I don't I can't see any other sector at the moment that um, that is that has the fundamentals that uranium has, and not only like were the fundamentals pretty good in 2016, although I was way too early. You know, at that time, I thought it would be a 3 to 5 year trade, and here we are now, firmly into year six almost. Well, yeah, year six, and but you know, throughout that period of time, the actual fundamentals have increased dramatically for the better. So being value investor and seeing that, you know, believing that there's no other sector that presents the you know, this kind of opportunity, I'm extremely comfortable of being you know, all in uranium. I've said many times I'm not a trader. People ask me, you know, are you in and out? No, I sometimes I will trim positions, or I will, you know, readjust my portfolio depending on the different news and events. But I'm still you know, 100% uranium.
So, with that much conviction in this space, are there any bearish scenarios you see for uranium? Is there a case where uranium maybe could not be this great opportunity that you see it as?
Well, I mean, the information would have to change, right? So, you know, in terms of the fundamentals, it's difficult to see in terms of fundamentals how that could change, because it's just improving. I mean, in 2016, we didn't have all of this, you know, like kind of nuclear renaissance that we're seeing now, or almost, well, many countries are now saying that they're, you know, they're seeing the, you know, the writings on the wall. If you want carbon-free base load 24/7 power, you know, outside of hydro, um, nuclear is the best option. So, but there are you know, events that could occur that would be very harmful to the sector. One of them being, you know, God forbid, a nuclear incident or a nuclear accident. And we've seen the market kind of skittish towards that. We had some news last June about something that happened in China, and for a period of about 2 weeks there, you know, the our equities were hurt by that. And then with the situation in Ukraine, with the Chernobyl and one of the nuclear power plants there, you know, there were fighting around there, and there was a, so that had an impact on the equities. So if there is a nuclear accident, you know, it would certainly be harmful to the equities. But depending on what that accident is, it could be maybe just a short to mid-term, you know, pain. There is, in my opinion, the largest, the most significant bear market or bear situation event would be if China realize that there's a flaw in the design of the reactors that they're mass building, and then they would have to maybe put that program on pause or on hold. To me, that is the biggest risk to this investment thesis.
So, how do you feel that the conflict in Ukraine might play out in terms of the supply demand fundamentals of uranium? You know, Russia plays a big role in the enrichment of uranium, they also produce a lot. And I believe recently the Biden administration said they were going to allocate, I think it was 3.4 billion or some fairly decent number of capital towards, you know, domestic uranium production and enrichment. Do you think there'll be further sanctions against Russia, first of all? And I mean, you look at Kazakhstan, the world's largest producer, which is closely allied with Russia. Uzbekistan as well is a huge producer. Do you see sanctions coming down the line in the uranium industry? And If not, do you still think that that conflict will play a role in terms of the uranium industry as a whole?
Well, we're seeing the conflict having an impact, a huge impact on the sector already. So it's not a question of do I think, we're seeing it live. And in order to understand the impact, we need to go back to the supply demand fundamentals. Demand for uranium comes from the nuclear industry. And so nuclear reactors being quite expensive to build, it's logic to understand that most of the reactors are exist in the richer countries, which are normally associated with with the western part of the world and Europe. And if you look at just the United States, for example, they have I think it's 91 nuclear reactors that are operating right now. So out of the 440 nuclear reactors in the world, they have about 22% of those reactors just in the United States. So and to understand that demand, so let's just take the United States for example. So there's the Russian suspension agreement there, where for a period of time, the US banned Russian imports of uranium. And so there was an agreement that was formed that called the Russian Suspension Agreement to allow the nuclear reactors in the United States to import 20% of their needs from Russia. So the biggest consumer of uranium in the world, is obtaining 20% of their material, which is cheaper, from Russia-controlled entities. And that includes Yellowcake itself. It includes the conversion part of the fuel cycle. It also means the enrichment part of the fuel cycle. So the announcement that you just talked about, which was this week, Tuesday, I believe. So the Biden administration is now seeing that, either sanctions will occur or the utilities themselves are self-sanctioning. In other words, they're trying to find other means of obtaining the supply that they need. So they're announcing, like you said, between 3 and 4, close to $4 billion to be able to obtain domestically produced material. And that's even before that announcement, that was, the self-sanctioning. The US utilities were already looking at domestic or friendly producers to obtain their material. One of the companies that I'm invested in, Energy Fuels, Mark Chalmers, the CEO, announced on a Crux interview last week or a couple of weeks ago that, their phone is ringing now. They've signed 3 contracts with 2 different utilities in the United States to procure their material. So it is having an impact on the demand side. Now let's look on the supply side. The world's largest producer of uranium is Kazatomprom. They produce about 40% of Yellowcake. And a lot of that material is sent to Russia for conversion and enrichment. When you look at the uranium fuel cycle, it starts with, taking uranium out of the ground, processing it, and obtaining a yellow powder called yellowcake. That yellowcake is then converted into UF6, which is a gas. And that gas is then enriched so that pellets and fuel rods can be fabricated to go into the nuclear reactors. Well, Russia controls around 40% of the conversion and the enrichment capability in the world. And it's a low cost provider of those services. So, so now that, with Russia's aggression on Ukraine, the Western world is now alienating, they're looking at alienating themselves from Russia and possibly Russian controlled companies and entities and countries. So that may have an impact on Kazatomprom. Uzbekistan is also a pretty large producer of uranium. Russia produces a bit of uranium, but they control a good portion of the conversion enrichment capabilities. So it is having an impact, and I think that impact will be felt for a long time. So, it's like everything is realigning, everything is shifting, and this is also, what I was talking about in terms of, how the fundamentals in the sector are improving just by the day. Unfortunately, nobody wants to see what's going on in Ukraine right now, and everyone hopes that that's going to be resolved quickly and that Russia will be punished for it. They deserve to be. But on the investment side, it's turned out to be, having an impact on our investment thesis.
So, how do you personally approach investing in uranium these days? You mentioned you started off with Cameco, that was your first play in the uranium space. Do you still prefer the producers? Do you like developers, explorers, physical uranium funds, or is it a mix of all of those for you?
Right now, it's mostly developers and explorers. So I started out, excuse me, started out with Cameco, which is probably the blue chip with Kazatomprom in the uranium sector. Like I said, very, very good company, well managed, outstanding assets. They have two of the most richest mines in the world out of any commodity. And so that's how I started. As my knowledge in the sector increased and improved, I started expanding into developers, and again, as that knowledge improved, I shifted away from producers, kept a few developers, and the majority of my portfolio is now into explorers. The reason for that is because my tolerance for risk, as you can imagine, is pretty high. And when I say invest, let's be clear with regards to the speculator, the explorers. It's speculation. They're trying to find something. The risk is extremely high. The chances of them finding something is pretty low. They might find something, but will it be a deposit that's big enough and that has the actual all of the different technical factors that can be developed into a mine? And even if it is, that process can be extremely long. But if they do find a deposit, that the returns can be quite fantastic, especially in a bull market. So what I did is I moved away from the producers, and the reason for that is I'm looking for a higher return. My appetite for risk, as I've mentioned, is quite high. And if you look at, there's a readily available Sprott report that was prepared in February of 2007. And so you just need to Google Sprott 2007 uranium, and you'll find that report. And they did an analysis of the uranium sector at that time, and we all know what happened from 2003 to 2007, where the price of uranium went from $9 a pound to $138 a pound. And the returns of uranium companies at that time were phenomenal. So when they did that report in February 2007, the price of uranium at the time was $70 a pound. And they have an analysis of about 25 companies, producers, developers, and explorers. Some of those companies, you won't even recognize the names anymore. They don't exist, or they've been sold to other companies or morphed into another company. And you look at the market caps of some of the explorers in there that you've never even heard of before. And they don't, like I said, they don't exist anymore. And you're looking at 200, 300, 400, 500, some of them 900 million market caps. That's in 2007, when there was way less money in the markets. Right now it's more than 15 years ago. And that's when the price of uranium was at $70 a pound. And Sprott was predicting that by the end of the year, they thought that the price of uranium could hit $100 a pound. In July of that year, it hit, as we know, a peak of $138 a pound, let's call it $140 a pound. And the valuations of those companies must have increased dramatically because the spot price in that period of time doubled. So it's safe to assume that those market caps that I was mentioning at 200, 300, 400, 600, 900 million must have doubled at least in that period of time as well, if not more. And so I was looking at, from 2017 to, I was looking at market caps of these explorers at 8 million, 10 million, 15 million, 20, 30 million, 40 million dollars. And I was looking at the bagger, the possible baggers that I could get. So, if the thesis is right and the price does see a spike again, then I think it's reasonable to assume that the market caps of these companies should at least hit what they were in February of 2007 when uranium was $70 a pound. So they should at least get to 2, 3, 4, 500, 600 million dollars. And these are companies that didn't have deposits at the time. They were just, uranium companies, and most of them were what I call BS companies. And so that's kind of what helped me form my strategy. Is okay, let me put some of my money into developing companies, developers in. So I have 2 developers in the States, I have 2 developers in Africa, and the rest of my portfolio is in 7 to 8, around 8 explorers that are positioned in the Athabasca Basin. And my rationale here is that most of these explorers should attain, 200, 300, 400, 500 million market caps at some point in time in this uranium bull market, which from now is still like 3 to 5 to 6 baggers from now. If one of them, just one of them, is fortunate enough to hit a deposit that is noteworthy and could be mineable, and that could, and the company could be sold, something like 100 million, like at that point in time in 2007, deals were made for $10 a pound in the ground. So, if a company can find a deposit of 100 million pounds, well, at 2007 prices, that was worth $1 billion. The market cap of that company would have been sold for $1 billion. So that was that's my strategy. The developers are good quality developers. In the United States, there's a lot of money in that market. Those companies do well. So my home run possibility speculation is if one of these explorers can find something valuable, then that's going to be a home run. And if not, then I'm referring to, my reference is 2007, when the price of uranium was $70 a pound. They should hit 3, 4, 500 million market caps, which is still 3 to 6 to 7 baggers from here. So that's basically my strategy in the sector.
So what would you say to somebody who's maybe newer to the space, who's, heard the thesis, who understands that uranium, the supply demand fundamentals, and sees the nuclear renaissance happening all over the world, nuclear reactors being built all over, China alone has like 150 they're planning to build coming up here. What's the best way to enter the space, in your opinion? Is it through something like an ETF, like the URNM or HURA in Canada, or is it the Sprott Physical Uranium Trust? Or maybe big producers? How would you play it for somebody who's new to the space?
Well, I get a lot of direct messages, and sometimes I even have phone conversations, and then through conversations people ask me, and on that note, I'd like to shout out to Stéphane in Beaumont, Quebec, a new uranium investor. So no, I don't. My strategy is like, it's speculation, and you have to have tolerance for very high risk, and not everybody has that. So so for someone just starting out with less knowledge in the space, the ETFs are the way to go. So, sprinkle money depending on, like, if you want to invest on the New York Stock Exchange, then URNM is the way to go. On the Canadian, and then it's HURA. And also a portion in SPUT, like the Sprott Physical Uranium Trust. And I also like the Uranium Royalty Corporation. I think that also offers like a different, a different investing opportunity with a little less risk. So that would be my advice to someone starting out. If you do want to, you know, go directly into equities, then it would be maybe a producer or a higher quality developer. Cameco is like, to me, it's a good one. It's going to pay dividends. They've got cash, so that would be a good one if you want to go the equity route. But just starting out, the ETFs, a combination of the ETFs and the Sprott Physical Uranium Trust.
Well, thank you, Terry. This has been an amazing conversation. I've learned so much. I'm sure everybody listening has as well. For viewers who want to hear more from you, where can they find you online?
Well, I'm on Twitter at Terry Papineau 2. That's basically the best way to communicate with me. You can direct message me, and I respond to those who direct message me.
Great. Well, thank you so much, and look forward to having you on in the future to continue the conversation.
Looking forward to it, Jesse. Have a great day.
If you enjoyed this interview with Terry Papineau, you won't want to miss my conversation with Tavi Costa, where we talked about why he sees a massive shift out of traditional 60% stock, 40% bond portfolios into commodities in the decade ahead, along with his thoughts on uranium, oil and gas, precious metals, and much more.